Hello and welcome to another update video about SEI. As we're heading into a new trading week, SEI has dropped further. That is so far in line with the last update, and it's actually quite good because it gives us some more clarity and it just confirms the wave count that we've had on the chart, at least for now. The idea was that this wave 4 is still in the making, and I gave you in the last video, well, this support area overall is, I think, well known. We've been talking about it for a while now. It's between 63 cents and 44 cents, this overall support area. But as soon as we had a potential B wave top in place, I was able to calculate for you a more specific target area for this C wave that you see highlighted in yellow on the chart. In wave 4, in this corrective pullback, a wave 4 is a 3-wave move. Typically, that consists of an ABC structure in most cases. So we obviously had our A wave, which is the first wave of the correction, completed on the 8th of January. A B wave rally that completed here on the 17th of January, could not exceed the previous high. Just very clear flat structure actually. And then this the deep pullback that followed this choppy rally indicated this is a C wave down. And typically an A wave and a C wave, well, they often have the same length. And that points towards 58 cents. So we've nearly arrived at that point now. Doesn't mean it has to stop there, but it is one of the more reliable levels to watch, especially if it falls within such a larger support area. And it does. So 58.1 cents is the next key level to watch. That hasn't changed. It's also very, very close to the previous swing low. Has to do with the situation that, this B wave nearly went to the top of the previous third wave. So if the A wave and the C wave have a similar length, we should see something like a double bottom. Maybe the C wave go a little lower than the A wave. That's essentially what we wanted to see, and it's materializing right now. Also, if it goes below 58.1 cents, they're just the next levels that we have to watch. So basically, it's all about considering these as more or less reliable levels where we could see a bounce in addition to structural support. Obviously, you see all these structural support levels here at 58.5 cents, the A wave low. The previous wick, I'm not sure if we can trust it, but it ended down here at around 56.5 cents. Then here, the Monday 1st of January low at around 55.5 cents. And then here, this swing low at 53.5. So they are all within this white target area, you could say, between 52.8 cents, which is the 1.236 extension of the A wave, and the 58.1 cent level, which is the 100% extension. So obviously, even below that, we have further support. Really, I would have to give up on this scenario. I have to consider this scenario dead with a break below 44 cents only. So it could, of course, extend lower if it needs to, but it would already be a strong sign of weakness if we really see a break below the 38.2 retracement, which is at 52 cents. So ideally, the market isn't going to break below 52. If it has to, then we still can find support at 44.2 cents. To be honest, below that, I don't have anything clearly short-term bullish left. I can see that happen potentially if Bitcoin breaks down in its B wave. I talked about that in the B wave video, in the Bitcoin video. But for now, there is at the moment no evidence whatsoever that the wave C of 4 has completed. But things turn around in crypto very, very quickly. It could be that now we're talking about the red candles that we see here, and just in a couple of hours, the price might already have moved up towards 65 cents or something. So it happens all the time. So therefore, I prepare you for this. I prefer to show you the relevant levels. And that's why pullbacks are so important in crypto, because these pullbacks, when you identify a chart that shows potential to the upside, and then we see a pullback, because they take some time, it's easy to prepare people. Whereas if I was talking about breakouts all the time, when they happen, they are gone already, right? It's just too late then. So pay attention to the levels indicated. A break above the last swing high would be first indication that this low is in. We talk here about 69.5 cents. So that's the last swing high. Once the price breaks above that level, I think, good indication, especially from the current position, that a low is already in. Okay, so it looks pretty complete. Could go a little lower, ideally, but essentially this is now the area where it might make sense to watch for a potential reversal. Okay, that's my update about SEI. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.